So, Mr. Rokakis, you are our first witness. I welcome you as not simply as the distinguished treasurer of Cuyahoga County, but as someone who I've served with in public life for decades. You have been an exemplary public servant, and you honor us with your work and your presence. Thank you very much for being here. Please proceed.
Thank you, Mr. Chairman. Thank you, Mr. Chairman Kucinich and Ranking Member Issa, for allowing me to speak today on the topic of subprime lending and the harm that it has caused to so many communities all over America, particularly communities in Ohio. The damage to the Buckeye State has been enormous, but sadly the news of the past few months convinces me that the worst is yet to come. My name is Jim Rokakis. I'm the County Treasurer for Cuyahoga County, Ohio, county of over 1.3 million people that includes Cleveland and 59 suburban communities. For at least the past 7 years, urban leaders in cities like Cleveland, Dayton, Toledo, and other older, more mature cities throughout America have been decrying the explosion in foreclosure filings in their communities. They have complained of abandonment, of property flipping, and of a lending industry that we thought was behaving so irresponsibly, we were convinced that someday a segment of that industry, the subprime sector, would implode. We complained of no document loans and of adjustable rate mortgages that would reset at a rate higher than would be well beyond the means of the borrower. We complained of borrowers known as ninjas, no income, no jobs, no assets, who were often buying properties, multiple properties, very often with no down payments. We complained of fraud on an unprecedented scale that involved buyers, sellers, brokers, bankers, and appraisers. Mr. Chairman, members of the committee, these tactics have devastated Cleveland and its neighborhoods. The most obvious example, Chairman Kucinich, is a neighborhood in Cleveland that you once represented, known as Slavic Village, where 900 homes have been abandoned in just the past several years. We pleaded for help at the state level, but were no match for the lobbying team assembled by the mortgage brokers, the bankers, and financial services industries that have come to view securitization and the use of collateralized debt obligations as a foolproof way to finance mortgages in this country, not just for people with good credit, but for people with bad credit or no credit at all. You've heard this before, but it bears worth repeating. The American dream of home ownership has become, for the hundreds of thousands of Americans who have been foreclosed, or who are being foreclosed, who will be foreclosed this year, for those Americans it has become a nightmare. For older, struggling American cities like Cleveland, this promise of the American dream has become a nightmare, burdening these communities with vacant properties and maintenance costs these cities cannot afford. For the millions of Americans who live next to one of these properties, or on a street with a vacant home, or many vacant homes, who have witnessed a precipitous decline in the value of the most valuable asset, their home, this foreclosure disaster has become a nightmare for them too. Last March, we began a foreclosure prevention program in our county that asked our residents who were facing foreclosure to call 211 hotline, where operators referred them to foreclosure counseling specialists. The director of that program, Mark Wiseman, is seated behind me. I'm proud to say we saved approximately 600 homeowners from foreclosure during that period, but I'm sobered by the fact that for every mortgage we save, 20 more foreclosures are filed with our clerk of courts. We have gone from 3,500 private mortgage foreclosures in 1995 to 7,500 private mortgage foreclosures in 2000 to over 13,000 in 2006, with no end in sight. These increases coincide perfectly with the growth of the subprime lending industry. What are we asking for this Congress to do? Don't fall for the argument that some on Wall Street are starting to voice, that this is a market problem that the market will correct, and that the market is already doing so by tightening credit standards. Mr. Chairman, you've already talked about it, but I've read various reports that estimate anywhere from 1.4 to 2.4 million mortgages will go into default. The losses suffered as a result of these defaults will run into the hundreds of billions of dollars. On a daily basis, we read reports of mortgage banks that are filing bankruptcy or are facing bankruptcy. Does anybody really believe this is all caused by a little hiccup in the market, one that we should trust the market to correct? There are two areas where this Congress can be a great help. Certain loan products must be abolished and loan officers must be held to fiduciary duty. No document loans have no place in the home mortgage industry. These loans, which are unapologetically referred to as liar's loans among brokers, are an invitation to fraud and should be outlawed. If your borrower can't prove beyond doubt what their income is, why are you lending the money in the first place? As far as loan officers are concerned, Mr. Chairman, the loan officer knows with a considerable degree of certainty whether the borrower he is working with will be able to repay that loan. Yet they reject the notion that they should be required to have that borrower's best financial interest at heart when they're driving the decision-making. This is the most important financial decision these borrowers will ever make, and it's critical that these mortgage brokers be held to the highest fiduciary standards. There has been talk in this Congress of a suitability standard. Does the borrower have the income to make a monthly loan payment? Not only next month's payment, but the payment when the loan rate resets. Selling somebody a loan they don't need or can't afford should cost that mortgage broker his or her license. When the industry testifies for this panel, please ask yourself one question. Why are we here to address what has become a national crisis? They'll blame the foreclosure disasters on a slow economy, on rising unemployment, on rogue brokers and bankers who have misbehaved. And they tell you we have enough laws and regulations, we just need to do a better job of enforcing the ones we have. Ask them if lax or non-existent underwriting standards haven't played a role in this disaster, or if high fees and bonuses totaling billions of dollars to brokers who were rewarded to write mortgages with higher interest rates and excessive fees haven't contributed to this foreclosure tsunami. Mr. Chairman, you will never be able to put a dollar amount on the heartbreak, the pain, and the distress caused to these families. Never. Please reject the argument that if Congress reins in the abuses of the subprime industry, that it will dry up credit for the millions of Americans with less than perfect credit. There is unquestionably a place for subprime lending in this country. Subprime loans can provide opportunity for people to own a home who might not otherwise have that chance. But, Mr. Chairman and members of the committee, to say that you must accept these abusive practices as part of this solution, well, that is just plain wrong. Thank you for this opportunity.